Hello and welcome to my morning note. We have a relatively calm day today on the markets. The euro has strengthened just slightly at the opening without ever going below the level of $1.25. And that's largely because people are feeling a little bit more comfortable about the politics of the situation, particularly Mario Monti of Italy saying that he thinks euro bonds are eventually going to happen. However, that still raises the question, even with the euro now at roughly its lowest in almost 2 years, of why it isn't lower still, given the extent of the political worries about the currency. Now, one possible theory is that it's in fact all down to China. With me now to discuss that theory is the Chief Foreign Exchange Strategist at Bank of New York Mellon, Simon Derrick.
Hello, John.
Hi, Simon. Thanks very much for coming on again. Let's take a look at this chart that you've produced, which shows the level of the euro against the dollar compared to Chinese reserves activity. Just explain to me why, in fact, we may be watching the responses to China all this time.
Absolutely. One of the key elements of the last decade has been the phenomenal growth in China's reserves. And one of the key points is that most of that money flows in dollars.
Yes.
But of course, China doesn't keep all that money in dollars when it goes into its reserves. It takes some of that and it pushes it out into other currencies. And the euro is probably the largest alternative currency that it keeps those reserves in. So typically when you see a large surge in their reserves, you also see a large surge in buying of euros as a result. And if you look at this chart, one of the things you see very clearly is every time there is a particularly big quarterly growth in the reserves, that's also when you get a particularly large surge in the value of the euro. Flip side of that is, of course, when you see the reserve growth come down, as you saw back in 08, start of 010, in the latter part of last year, that's when you get euro weakness kicking in. So we need to watch carefully reserve growth. When you see January and February this year, the reserves growing up. Surprise, surprise, the euro's higher.
Okay, and that might explain why the euro was so badly affected by the first flare-up of the Greek crisis 2 years ago, but was obviously relatively much stronger last year when, frankly, the political situation looked a lot worse.
I think that's absolutely right. And it also goes to explain exactly why. You look at January, February this year, you had the Greek crisis, or the second Greek crisis, reaching a peak. Yet the euro went from 126 to 134 in pretty well a straight line. So your question now is, what do we think Chinese reserves are actually doing in the month of May?
Right. Okay, now that leads let's go on from there. All kinds of very worrying hypotheses that people are putting about the Chinese economy at the moment. But let's also try to ask the question of exactly how much is the fair value for the euro. This is a fascinating chart from the IMF, which rather rams home the point that that Europe's economies perhaps weren't sufficiently integrated at the point that the euro started, something we all now know in hindsight. What do you say? This is based on purchasing power parity. Where is a sort of fair level for the euro, given a reasonably neutral stance from the Chinese? Okay,
I think if you took out the reserve story, then you would certainly, I think, be rather more in the 110s, the 115s that you see Italy, Germany and France as being fair value for. I think it's interesting if you actually look at the long-term averages for euro against the dollar, it comes out between 115 and 120 as well. So I think innately most people would recognise that being around about the right price, if it wasn't for the fact that, of course, we've got a crisis building within Europe. So it seems to me that just naturally that's our target for the euro. What we believe with regard to the developments with the crisis itself could clearly be rather further than that over time.
But it seems as though what you're really saying is we should brace for the euro to decline long term, but keep an eye on China, rather necessarily than keep an eye on political developments in the eurozone.
And I think that's exactly right. The only point where in the long run the euro is really ever going to find its value is when China long term stops being a buyer of the euro.
Okay, Simon, thank you very much indeed. I think the lesson is fairly straightforward. For all the terrors that are going on in Europe, we can never, but never afford to take our eyes off China.